Good morning, everybody. Welcome to Phoenix Trading Strategies. Today is July 29th, 2016. It is 9 a.m. Eastern Time. For those of you that are here for the first time, welcome. And for those of you that are back, welcome back. Before we continue, let's go to the disclaimer. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This presentation or website is neither a solicitation or an offer to buy or sell future stocks or forex. The representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance indicators or methodology are not necessarily indicative of future results. Okay, being that said and done, let's take a look at the calendar and go from there. It is Friday. We just had GDP numbers come out right now. See what came out for the UK. Numbers came out pretty good. Yeah, GDP numbers for Canada, they came in lower than expected. RMPI numbers came in lower than expected. Producer price index numbers came lower than expected. GDP numbers for the US came in lower than expected. Advanced GDP price index came in slightly better. Unemployment cost index came in as expected. And we should see Chicago PMI and consumer sentiment next. GDP numbers did not come out that great, and that has affected right now both the futures and the forex. So let's take a look at that real quickly. Let me go to a 10-minute. So basically, the GDP numbers have brought this all the way down. We're looking, came all the way down to 18,320. Now it's looking to trade to the upside. So they must know something about consumer sentiment that we don't. I'm just not quite ready to. Everything is indicating down at this point, so I'm not too fond of the Dow futures or the S&P for that matter, because for all intents and purposes they could be coming back to retest the ATR level and then basically just collapse one more time. So I think that we'll wait for the open before we make a decision on these. Gold made a tremendous move. It's trading now above 1340. I predicted since the weekend that we were going to go back to 1370. And Janet Yellen basically made a very strong case. It never went down below 1311, and it's been up ever since. So I do feel strongly that we're still going back up to 1370, maybe 1380 again on gold. Regarding crude, has been coming down to $40 a barrel, and at this point I wouldn't be long crude. Actually, I would be short. They're trading right off of this power dot level, which is basically the 50 moving average. You have the pivot here, you have the power dots here. Everything is indicative that they're going to come right back down, not go back up. And usually crude will move prior to the index's opening. So let's take a look. Let's add the volume indicators and see how they are relating. Good morning, Rich. How you doing? Let's give it a minute. Now remember, whatever crude does, it will affect the US CAD. So in this case, let's take a look at this. Let's expand it, and let's see if volume has been directional or not. In this case, it has. It has been directional from here and here, so it's still to the upside right now. However, at this particular part of the venture, I don't see crude going much higher than where it's currently trading at, because it came back to the price that it opened at earlier today for the trading day. So at this point, I would not be so bullish based on that and the fact that we have diminishing volume to the upside. They overextended themselves here. They threw the kitchen sink at it. They went long, boom. They went from and that's because they're trying to hold the level, but I don't think they can hold the level any further. So at this point, I would actually be short in crude, and stop loss would be literally 10 ticks. Yeah, 10 ticks from our entry, which is right here. So based on that, this should be coming right back down, because it just came up to the open, didn't surpass, and even if it did, it would go no more than 41.30. So it's limited, and they would have done it by now. So this basically demonstrates that they're failing. Another thing is that this candle right now has negative volume, and you can see that as it's coming in. See, right now you have 814 on the buy, 822, and then you have 1122 on the sell. Difference of 280 negative. So this says a lot about this trade right now. This one, great trade. They threw everything at it to try and bring it back up to the 50, but at this point, with this candle trading the way it is, I feel very strongly that they're going to come right back down, and they're definitely going to go below 40. They should go below 40.60, because they've already attempted it once, but I think that consumer sentiment is not going to favor them as it comes out, and we should see them come right back down. So I actually like this trade to the downside. Now, being that said and done, that would mean that the US CAD would also be a trade to the upside. And you can see how quickly, suddenly it was bullish, but then the negative volume gave it away. And that's the one thing that our indicator does, is that it tells you how the volume is coming in at the moment. There is no delay. And so we can see the same thing in FX as well. Let's go to the USD CAD. Let's give it a minute. Give it 1 minute. We're almost there. Come on, come on. NinjaTrader has a tendency to slow down when I'm running GoToWebinar. And the volume indicators also take up a lot of data. Okay, here we go. All right, we're almost there. Come on already. Almost there, guys. Ah, I know what it is. I have 100 days of data series. I was supposed to bring it down more. All right. Okay, so here, yeah, this proves it. Let's take a look at this. See here, volume was to the downside. Even here is an inside bar. It wasn't continuous now. Now, this is an inside bar. This one had diminishing volume to the downside. It was actually bullish. So this candle had bullish volume, even though it was a bearish candle. And then this one, of course, now has slightly bearish volume, but you can see the sellers coming in, the buyers coming in to basically buy it. Based on this, if we were to enter and go long from here, we could actually have a 10 pip stop loss, which wouldn't be too bad in this regard. Now, this is based on the fact that they strengthened oil, but it isn't going to do much for them. So at this point, normally I like to wait. I like to see the body of the candle close inside the previous one, but this is an inside candle. So it would, I'd have to wait for the close of this candle. And in the meantime, let me fix the data series. That's why. Jeez. No wonder. Way too many days. Actually, let's go to 25. I don't need that many. So in this case, we'd still have to wait for this candle. This one just began. We don't have a clear signal yet. So let's wait. In the meantime, let me reduce the amount of days I'm using for tick data. We'll come right back to it. Give me a second. We're almost there. This just might be our trade, actually. Yeah, see, that's why I needed to wait based on what it was doing, because it was continuing to come down, but I'm thinking that they're done at this point. And from this point on, they've got to make a comeback because crude is still holding price where it's at right now. So I don't think that this one is quite there yet. Let's see if there's a low. Yeah, right here. This is where they're going to have to hold it right here at 3101. You have a very strong pivot here. And if they don't break below that pivot, then they're pretty much going to have to hold it. So let's see how far does it, if they break or not break. See, this was directional, and this would be the last one, but if this candle doesn't, if there's very little volume here, and that means that they're exhausting their orders, so they're going to rebalance back to the upside. I actually like this trade back up because they've distanced themselves quite a bit from the mean. But I need to wait. It's too soon right now. We don't have a clear signal. Even if I went to the 5-minute, I think I still wouldn't be able to have a clear signal on that. So let's go back to it. give it a minute. Yeah. Now they continue to break below. Let's see. So it came from here, one. Everything was negative. Then inside candle held. And then boom again, down. This one was slightly bullish, but I think here's where they're going to hold. The volume is diminished here, so it's come down actually 100 pips. So I actually like this trade from this point to the upside. And my risk would be limited. At this point, entering at 30.95, I wouldn't risk more than I'd like to say stop loss of 130.88. They usually do this in fours, and they've already gotten 1, 2, 3, and 4, and this is it. So if it doesn't go below this, everything is very systematic for them the way they do it. Began here, 1, 2, 3, 4, then 1, 2, 3, 4, and then this should be it. As they came up and came down, they used the trend stop to come down from it, but they've come down quite a bit. I don't think they're going to continue to make that move any further. I don't like to give these trades too much time, but I won't risk more than that though. Yeah, see at this point, 5 pips as much as I'm willing to risk. Everything's still indicating down. Now we'll cap it at 10. We'll wait. They'll come back. Make no mistake, they always do. And the reason why I'm saying that is that crude is still holding. So this move is based on them just finishing. It's not just as crude isn't going up any further. So that one will shift. It's just a matter of time. I always like to see what crude is doing before I see what this one's doing. And see here, they haven't really done much. They've never gone above 41.09. So if at this point, and everything is still to the downside here, these inside candles didn't really do much, and they've been settling below the high. So sort of an indication that they're really holding the price. Even though the one thing I dislike about this is the trend dots, how they've been using them to rally, but at this point they haven't really done much here. So these candles have been actually settling to the downside and lining up to give us volume divergence. So we do have volume divergence to the downside as this has been going up. That's why that US CAD trade, it will eventually slow down, but it'll be based, it'll happen once we see crude come down at least 10 cents from where we're currently at. So right now we have to wait for it. Let's take a look at, so I'm still bearish on this trade. they're trading right off of the open, which is right here. Give me 1 second. Which is right here. This is where they opened. They never went higher than 41.17. Well, here the highest they went to is 41.10. So, and they're trading right off of this power dot level. So I'm still bearish in this. I'm not bullish on crude. Plus the fact that the numbers that came out didn't help them right now. So let's take a look at the Dow futures real quickly. Yeah, see this one here. Let's take a look at this. Volume here was to the upside, and they did a very good job, but here it held. They're trading right off a trend stop, and normally I would not go short based on this candle pattern. I would prefer the points of control at the top, because that would tell me that there's a difference between price action and the point of control where they prefer to bid and offer. Here, even though this is telling us that both buyers and sellers are not willing to bid and offer at a higher price, and that's why they flipped, they turned, came down, this is still indicative of a bullish trade. They're still holding it. This is, if I would have seen this one come down below the third trend dot, then I would be more inclined to go bullish. But right now, no, because normally once they make the move, they will usually come down 3 trend dots, and they did here. And then from this point, break to the downside, and they're not doing, they're holding. So at this point, so am I. I'm not going to be jumping at this trade. I think we're going to have to wait for the actual open on this one in order to determine if this is going to go or not. Let's take a look at the USDN real quickly. The USDN has a very strong correlation to this. Maybe that'll give us an indication of what to expect. Let's give it a second. Okay. Yeah, see this tricky little devil. Here, for instance, we have, let's take a look at this and see, down, up, down, up, down, inside candle, down. Everything indicates long here. See, from this point, they came in too heavy to the downside, and it's been 1 and 2. Now, normally, this candle here was an inside candle. They held the level, and this one came up. And now this one looks to be to the upside. Risk is minimal. So if that is the case, then we should see a small rally, but everything is still indicative to go down here. Until they break this level, 102.85, I wouldn't be too convinced of going long. Only because that once they come down significantly, they usually have to break 3 trend dots. It's not a matter of breaking 3 candles, and if they don't, then they reverse and continue to come down. So this is still indicative that they're still going to go short even further. So we don't have a clear view now. This has already come down significantly, but so has the Dow futures. Crude's coming down again. We're up four ticks on it. We'll go back to it shortly. Yeah, see, everything is indicative that they're going to continue to short this. Now, this is usually the candle pattern that we look for, and in this case, this is more indicative that they are going to go short from here, not long. So I actually like this trade to the downside more so than to the upside. Risk is minimal because we would put our stop loss here at 1839, but at this point I think we want to wait as they get closer to the open before we pull the trigger and get in. Let's take a look at crude real quickly. Yeah, see, this one had all the indications that they were going to bring this thing down. Now, from this point, it's when it's going to get tricky because now we need it to break below 40.95. If it breaks below 40.95, then at that point, it's a clear candidate to come down to 40.87, 40.84. Now, there are no pivots here, except here. This one right here, they just broke below it. So the next one would be here, 40.81. And then after that, we're looking at 40.76. This could be a very good trade to the downside, actually. This could be the one. I don't think it'll come down to 40.70. That would be quite an extreme trade on their part. But at least to 40.81, yeah, the potential is strong for it to come back to the mean. So this is a straight mean reversion trade. They're using the 100 as the moving mean in this case. So now we know that they're on the move to the downside, and that's going to affect stocks as well. So let's get back to the Dow futures before we look at any FX pairs since it's about to open. Yeah, see, at this point, everything's indicative down. So for instance, we have volume divergence here, and then we have it here. So everything at this point, this candle did not really do much as it went up. I'm thinking down, down, down. GDP numbers weren't that great. Got 1 minute left. Yeah, I like this short actually. In this case, they're trading right off the trend stop. We have power dot level. We have pivots. We have the moving averages. They're using the 50 as a mean. They've already come to retest it, and this would be the final retest here. So everything indicates that they should come down from here as well. Let's see what they do. The market just opened. Why, they're a little deceptive in their trade. Coming back to retest. Maybe hit the 100, maybe. So our risk is still limited. There's a pivot right here that they didn't surpass, and there's a pivot right here. So let's give it a minute. No, seems like they're not going to play it right now. They are going to go short. And they did this to us yesterday. Right before going short, they went long. Because there's no way they're going to hold this level. Let's give it a minute. Now, we're going to have to wait on this one. It will go down. They're not going to hold. They are not going to hold this thing. Not with earnings reports the way they've been coming out. And GDP numbers. They just don't want to go down any further, but they're going to go down. Even if they went to the 200 here, if they don't break above, they have to come right back down. But right now, we're going to have to step out of this and then wait for them to come back down. We'll get them. They won't hold, believe me. Maybe they're making the decision to pull back now. Let's see. Sometimes they'll, yeah, because crude is already down. We're already up 20 ticks on crude. 21 ticks, and it's still going down. So it went to 40.81. This one will come down. There's no way they're going to hold it. But they need to distract everyone to take it up before coming down. But they're going to tank today. No way you're going to hold this level. I know you better than yourself today. See, we're up 26 ticks on crude. 28. 25, 26, 28, 27, and still going down. We'll let this one mature a little bit. Someone watch this thing. But I don't think that they're going to go any higher. They would have done so by now. And the volume is starting, even though it's bullish, at this point, it's starting to diminish. So the sellers are starting to come in to offset those excessive orders. And if they do so, then they'll eventually come in and bring price right back down. So at this point, I'd say we wait. Now the danger here is that if they surpass 1836.61, so that's another 10 ticks, and that would be as far as I would be willing to hold on to this position. But crude right now, we're already up 30 ticks on that, and crude is a major force attacking this thing right now. See, here's where we could see the reversal come in right here. They hit the mean, and if this one does not make the move up, then it's got to come right back down. And I'm betting down. So we'll wait on this one. Just slightly, because the minute they come right below 1837, 347, that's when we know that we got them. So we'll watch this one. Let's go take a look at crude, because crude made a great move to the downside. I knew that that was going to be the trade for the morning, that it was going to set up, but it's also a major factor that will affect the indexes. Yeah, see, this one came down all the way here, and I think that there's still one more level that it has to go to. I'm thinking 4061 may be the next level. So this trade sort of offset that minor loss that we're incurring right now in the Dow futures. But it's also an indication that they're also coming down. So I wouldn't write this one off quite yet. Could be a 40, 50 tick move. Remember, I told you that they had to come right back down. I just wasn't expecting them to come back down to 4061, but to 4081 most definitely. And in this case, they hit the level right on the money. So they may consolidate here slightly and then continue. But this is a good indication that consumer sentiment numbers are not going to be that great, and so we will have other trades in play. So the smart thing to do on a trade like this, though, is move your stop loss. If your stop loss was here at 41.10, which is what we had called, you can move your stop loss to 40.90, or I would even move it here to 40.85, right where this trend stop is, because they're using the 100 as a mean, and they've already broken below it, and I think they've got one more level to go. So you can actually lock in almost 20 cents here, or 15 cents here, and then just let it ride. But I think this thing still has a little bit more to give, so I wouldn't be getting out of the picture quite yet. And you can see how they went down. This one, I'd like to say that they're just going to consolidate before they continue to come down, but they're going to continue to come down. And now we're starting to see the Dow actually come right back down. That's why I said it was just a matter of time. There's no way they're going to go along not with the numbers. And they played me yesterday, and I got out with a small loss of 3 ticks, and then they crashed 100 points. So at this point, see here, from this point on, because it failed to go any higher, and they threw everything at this, and they hit the 200 moving average, which they're using as a mean, and you have another power dot level here, that is usually an indication that they are not going to go up any further, and that they're going to bring the market down. So at this point, we can wait. So let's give this a minute, and then we'll go to see if there's anything in the Euro Yen. Looks interesting. Okay, new candle. Let's see what this one does. This one's very crucial. I like the fact that it opened below, and since this candle didn't have much to show for, it did settle with a slightly bullish outcome, but very, very slightly. The volume was just nothing. Here they threw everything, and here volume completely diminished, which is not a good sign for them, and that means down. So once this candle initiates to come down, then they're pretty much done. So let's do, right now we're 28 ticks, 27, crude 30 ticks. So crude is still going to the downside. Like I said, at this point, crude was the main one, the main trade, and it should go down We should catch a good 40-cent move on that total. We'll take a look at the US CAD. The US CAD should have bounced right back up. Yeah, see, this one still has, if it breaks below this level, and I think it's going to break below, then we should see it come right back down to 40.62. So it's doing a very good job of, they are doing a lot of high frequency trading here. That's the only issue right now that I have. But this is an inside candle right now, and it should break down. This one, see, this one had to basically come all the way up, and it didn't. So at this point, I'm still bearish on this trade. I'm not bullish. It's just a matter of time. I don't think that they're going to hold the level too long. Before you know it, they'll break below it. Let's take a look. Let's go back to that miserable Dow. Actually, I want to take a look at the NASDAQ first. That one should be interesting. So this one's going to be interesting. If it doesn't break below 40.70, so it's a 30 tick move so far. Will you break below is the question. If you do it now. There you go. There it is. Keep going. Keep going. Keep going. And okay, now there's a pivot right here. Broke right below the pivot. The next one in play is here, 40.60. So another 9 ticks to the downside would be appropriate. This would be the moment to do it. And see, crude's going to be our catalyst. This is the one that's going to tell us that the Dow is going to crash. The Dow hasn't done much. So at this point, this is a must. Now, I don't expect it to go any lower than 40.60. Yeah, they would really have to break right through that price level to go down further. Oh boy, right to the money. Let's go right to it. Now, if it breaks below this, then at this point, I don't know what to say. I'd say that crude's in deep trouble. Now, normally after a trade like this, if I don't see that it's going to break below, I'll usually just close it out and move on to the next. You'll usually want to get at least one good trade in the morning like this to offset any other trades that don't play out. So at this point, this one's done its deed, and I don't think that it would do any further. I mean, it's hit our mark right on the money. It could go a little further, but they would really have to do it now, and I don't see them doing it now. So I think they're going to hold. They're going to hold the price right here, and that's okay. Better to take what's on the table and move on to the next. Let's take a look at that miserable Dow. No, they're stubborn about this one. See, this is the level right here. I won't take a bigger hit than that. I was expecting it to come down, but didn't do it. But I'm still expecting them to come down. Oh, wait a minute. I'm not expecting them to continue to go up. Even though they've come down all the way down here, this trade is still. No. Oh, this might be it. We actually might be able to get another entry here and short it from here. It's doing exactly what it should. Yeah, this looks good from here actually. I would actually add another position here. And from this point, they should really come down like a stone. Yeah, there was no way they were going to hold that level. Impossible. Let's see. Once they go below the 50, then it's on. Come on. Break the level. It broke below these two pivots here. And it's got 4 minutes left that there's a pivot right here. And this is the one that's having a hard time, but if it breaks below it, it's downhill from that point on. You could see the pivot right there. But everything looks good so far. Yeah, I knew they weren't going to be able to hold it. They were being treacherous. Here it comes. Come on, come on. Make it a good run. See, I'm expecting the Dow to come down actually 100 points. Yesterday they swindled me out of that trade because I got out too soon. But in this case, so long as they hold this level, the next candle in the next 3 minutes will be very crucial. And then from that point, we should see it come down. But so far, they've come down quite a bit. They've come down 20 points. And it did come down to the third trend up, but it has to break below. If it breaks below this level, then we're on. So 18,335 is where it has to break below to. And once it breaks that price level, then we know that they're going to continue to really just come down like a stone. Yeah, see, crude was going to be the key indicator here, because there's no way that they're going to rally stocks with crude coming down based on earnings from oil companies being negative right now. Has to break below that 18,335. Once it goes below that, then we're good. Okay, new candle. Great. I don't like the fact that it didn't break below on this one, but we'll see what this one does right now. Usually it's a bad indication once they come down. If they don't break below the third trend dot right away, it's imperative that this next candle do it. But if it doesn't come down, then it's time to exit the trade. Otherwise, the reversal isn't justified. So let's see. Crucial moment for them. It's the second time they come to our level, and once they break below, that's it. Then it's on. we're going to have to give this thing time to evolve and go look at something else. I would tell you, based on this, place your stop loss above 18,347. And then once it moves down to 18,329, go to break even. Let's go look at something else in the meantime. I want to take a look at gold because gold has been a trade that's been on the move since Monday. And then we'll go take a look at some FX pairs because the problem is that we came in a little late on the FX side. A lot of trades had already played out. Oh, look at you, deceptive, very deceptive. So this one came down to 1340. They did go as high as 1347, but I still have a strong feeling they're going to take it right back up. So, but from 1311, 1340, that's still a $30 move. So we'll leave that one. Let's continue. Let's take a look at the US yen. Let's give it a minute. Okay. So yeah, see, this one did come up, but now it's on the downside. We have a pivot, we have a power dot right under the 50 moving average. Again, it's more of a retest, except that at this point, it's come down so much that I don't think they want to do anything with this any further. I think they're not, at this point, I don't see them moving this down any further. Let's go, let me remove some of these indicators now, and let's go to a higher time frame. Forex is always better to look on a 10 or a 15 minute. Yeah, see, they've already come down quite a bit. This one's not in play. The euro yen, we have a signal here. Now, this one, again, this one's come down quite a bit. And the only thing that we would need to verify here for this short trade would be volume and order flow. That would be the only thing that we would be missing. So let's give it a second. Yeah, see, the Dow's crashing. We'll go back to that. We're up 15 ticks on that now. Just give it a minute. Crying out loud. Now these numbers came out already, which are consumer sentiment. No, Chicago PMI numbers came out and they were better than expected, which is not good for them. Yeah, see, I like this trade to the downside on the FX, which is the euro yen. Everything is indicative that it's gonna come crashing down, but there's no liquidity because they've moved so much on this, and that it's just not there. It would be reckless of us to get into a trade and have a 15 pip stop loss. I refuse to do that. The max that I'm willing to give up is 10 pips, but in this case, this thing should have moved by now, and it hasn't because they're very reactant to what happens to the indexes. And if we go back to the Dow, you'll see that that one came crashing down. And maybe since everything happened in FX overnight, maybe all liquidity right now is concentrated on the futures today. See, now we have, on the 10-minute, we have 2 power dots. We were looking at the 5. So this was an indication that they were going to come down. We're up 20 ticks, and from this point, it has to come down. I'm expecting at least a 50-point drop on this, minimum, from where we're currently at. So it went from 18,360 and it's down to 18,319, and I'm expecting a bigger drop. This is not over by a long shot. There is still room for this to continue to go down. Like I said yesterday, we got out too soon, and then they came crashing down. So at this point, I think it's just a matter of time before they give up more. So let's give it a minute and see if it breaks below this level. Let's see if there's a level here that we are missing. Okay, we have a pivot here which it broke below. The next one is here at 18,299. So that's still another 20-point drop. And then after that, no, that would be, then after that we're looking at it to come down. Yeah, see there, yeah, 18,299. And then after that, 18,279. And maybe they just don't want to go any further. But at this point, I don't think that they're going to be able to hold this thing and bring it back up. Now they may be waiting for consumer sentiment. And these numbers are rigged, unfortunately. But here, you could move your stop loss. If your stop loss was here at 18,436, I would say you can go as low as, yeah, 18,333. It's 10 ticks away. If it comes back up, it comes back up. It'll take you out. But at this point, with 1 minute to go on consumer sentiment, I don't think that they're going to do anything significant. So let's give it that 1 minute and then move on to the next trade. All right. Came in lower than expected, came in at 90 instead of 93. So not so good news for them. I'd say they still have another run to the downside. Let's see what the numbers were. Yeah, it came in low, slightly lower than expected. Inflation expectations, slightly lower than expected. That's not a bad thing, but it's a consumer sentiment number that really matters at this point. See, my only problem is that they went from power dot level to the trend stop, and they're having a really hard time breaking below this level. If they break below this level, then we're good, because we know that we're looking at another 20 ticks to the downside, but they're not seeing our way right now. And it's not about them seeing our way, it's about seeing what they're doing. So in this case, you see how they bounced right off of this pivot. Now, this candle is just started right now, and it doesn't look like they're going to continue, unfortunately. They're at the low right now for the day again. So I'd like to say it's better safe than sorry, and time to move on to the next trade. Let's see if it comes down one more. This would be like the final one. See, it's an inside candle, so it's trading inside this one, but everything is indicating that they've got to come down, but they don't. And at this point, I'd rather not be distracted and take us to look at something else. Yep, let's just move on. Let's take a look at Euro Swissy is in play. Let's see. Okay, so let's take a look at this one. This one's interesting. It already began. They had a strong indication here that they were going to go down, and they did. So it's been directional ever since. It's a pretty active one right now. My thing about this one is that it is at the low of the day again. You know, that's the problem with this. That it's not, if it doesn't break below this level, then we should be considering looking at a trade to the upside. But right now, it would be reckless to do so. So I'd rather just move on to the next one. We're late. Let's take a look at the Aussie yen. That one's lighting up. Give it a minute. Okay, so they finally decided to move. And the Dow continues to go down. But no trade, no liquidity. It's just too light. When they trade too close to the 50% line, and you can see the candles and the values here, it's just not, you see it diminishing even further. So I'm not that keen on that one. Let's take a look at the pound dollar, see if we have anything there. Let's give it a second. Okay, so it did come right back down, but now it's holding here, right back to the mean, straight mean reversion trade. Everything up, and then here they overdid it, and then it's been down ever since. However, there is still volume divergence to the upside. I actually like this trade right back up. I would say there's a pivot right here and here, so our risk would be minimal actually. Our risk would be minimal. I'd like to say 5 pips. Stop loss should be at 131.70. And my reasoning is very simple. Even though it's come down, they have an issue. And this issue is that here they had volume was directional, no problem. But now here, even though it's come down, they've had a lot of resistance to hold price up as well. And so we're having what's called volume divergence. Volume going one way and price action going the other never can coexist with one another. You can't have price action going this way and volume setting up to go long. Eventually, volume drives price action. So at this point, I'd stay long. And my risk is minimal because from my entry, 31.70, my risk is 7 pips. Now, if I didn't see this type of play here with the volume, I would never ever consider going long. But this is very clean and very straightforward. So even though this was directional and it was very clean from the get-go, from here it was up. Here they're doing the same thing but in a much more this was much more structured than this, but this is still structured divergence. So at this point, I actually like this trade to the upside. Plus, they're bouncing right off of the 200 moving average, which they used as a mean. So they traded away from it, came right back to it. Now, I'm not expecting a big trade here. Let's be honest. You know, if at most the next pivot level is right here at 31.91. Now it's at 31.83 right now. If it comes above 31.91, then at that point we should see it. See, at this point this would be the resistance level once again. If they break above this, then they're going right back to the top. So 31.94 would be, 31.95 would be our target here. And if it goes above 31.95, then at that point we should see this continue to the upside. Crying out loud. Let's give it a little time to develop, but it looks like it might play out. See, now at this point you can move your stop loss to break even. We were at 31.70. Now you could move it to 31.78. Yep, that right there, 31.95. If it breaks 31.95, we're in the game for a good trade. So far for Friday morning, we've been doing pretty good. Monday was just sloppy. Couldn't really get an angle. But they may be trying to rebalance and leave everything ready for next week. They haven't had a good week. Come on, go up to 31.95. Make it a nice 20 pip trade for us. Seems like it doesn't want to give anymore. So at this point, we may have to move on. Yeah, that's a shame. We needed this candle to actually come up and stay above 31.91. And you can see the volume as it's coming in right now. They have 80 million on the buy, 66 on the sell, difference of 15 million bullish. But at this point, with that amount of bullish volume, we really needed it to come up to above 31.95. So it's obvious that they don't want to, that they're going to bring it right back down. So at this point, it's better to take what's on the table and move on to the next trade. I don't like to wait around for trades that aren't going to go. Let's see, let's give it a minute. See if they pop. Volume right now is increasing to the bullish side. 104 on the buy, 77. On the sell, difference of 32, 34 million, 35. But this would be the final candle. If this candle does not close above or come close to 31.95, then it's time to exit. And I'm afraid that they would have done it by now with all that bullish volume. That's the one thing that is deceptive right now. Price action is receptive to the bullish orders as they're coming in. You got 127, 129 now, 130, 34 million net, 35 million net. Bullish volume 33, so the sellers are holding 102, 104 on the negative, 105, 106, 134 on the buy. Now there's 135 on the buy. 136, but they're having a really hard time breaking above 31.91. And we're 5 minutes into this candle, which is not a good thing right now. So at this point, yeah, see they're losing momentum. And it's Friday. I'd rather just, maybe 31.91. Let's see. If it doesn't break above this, then it's over. So this is the moment of truth for us right now. Oh my God, they broke above. Now 31.95, which is right here, is where they need to break. If they break above that, then it's a clear right to the upside. Maybe they're going to shock us. They're at 31.94. get 31.93, and the volume is strong. You got 43 million bullish, 170 on the buy, 127 negative on the sell. So it's a 44 million. So it is reacting to it, but that 31.95 is a real doozy. It already broke above 31.91, which is what we needed. 4 minutes left on this candle. And no cigar. Let's give it a minute. Again, we're back up above 31.91. 53 million bullish. If it breaks above that 31.95, then we're good. But no. 2 minutes left in this candle. If so long as it closes above 31.91, I'm good. But at this point, the next candle would have to continue up, and if it doesn't, then it's over. I don't think that they're going to. Unfortunately, I don't think that they're going to follow through. I think that they're going to come right back down. So it's better to be safe and not sorry, and move on to the next trade. If it goes up further, great, but at this point it's Friday. I don't think they're going to do much more. They would have done it by now. Let's see if we can find something else. Oh, treacherous. They broke. It would have been a 20-pip trade for us. See, the problem is that they have to come up 32.07. And that was my biggest fear, that that's a strong move that they have to make right now with very little liquidity in the market. It's very questionable. So let's move on. Let's take a look at that Dow real quickly. And we'll move on to the next trade. So far we're 3 for 3. Okay, let's see. Did they have the nerve to come back up? They went down to 18,300. They do actually. See right here, there is volume divergence to the upside. They held this one. And this one looks good right back up. But I don't think it'll come up too much, and it's too... It would have to break above 18,318 for me to be interested at this point, because they've been here before and then they come right back down. So I'd say we wait. Let's continue. Let's take a look at the New Zealand CAD. That one's always a very interesting trade. Yeah. Hold on. All right, New Zealand CAD. This one came up. We're late. No trade here. Let's take a look at the USD CAD, because that one had to have reacted based on what crude did. Let's give it a minute. Almost there. They didn't come up much. However, they did do something which is slightly better than that. Okay, so let's take a look at this. Was this directional? Yes, it was. From the get-go, it came down. Here's the first wave. Here's the second wave. And then here's the third one. Now, here's a problem that I have here. So they've defended 130.83. They're at 130.95 right now. They came up, didn't break above this trend dot, came right back down, inside candle, held it, and then bam, made the move. From the looks of this, if they come right back down to retest 130.83 and fail to break below it, then we have a trade right back to the upside, because they will eventually have to come right back up and retest the mean, which in this case was the 200. So at this point, we're a little bit too, we don't really have a signal to take this trade long unless they come down and retest this level. Then at that point, I would consider it. But at this point, I don't have a trade, so I cannot take that risk. So let's eliminate some of these indicators and let's go look and see if we find something else. Let's take a look at the Aussie dollar. No, that one rallied. We're late. Aussie yen didn't do much, came down, bounced right back up, and it could come down, but you can see that after all this nonsense that they went through, they're not going to do much. Now, we may want to look at it on the higher time frame now and see what they're doing on the 60-minute. That would give us an indication. So here they traded up. See, they did break above the third trend out and then came right back down. Now, on the 1 hour, everything indicates that they're going to take it right back up. Let's see if volume and order flow define that trade for us, and if they do, then we should have a trade right back up. At this point, it's questionable. Let's give it a minute. Yeah, see, Normally, this is the trade signal that we look for, this candle with the points of control below it. Even though it came up, it failed miserably to come down, and it held above the trend dot. In this case, it's trading above the trend dot. So the question is, do we have volume? Is volume directional or is it divergent? At this point, everything indicates short, but price action isn't reacting to negative volume right now. It's holding. So let's draw a line and let's look at this from a more practical perspective. So this is basically our support right here. Now we can go into the smaller time frames and determine our risk and our reward on that trade. And that trade just might be one that does very, very well. Let's give it a minute. See, that's what makes a difference when there are market reports. You have more volatility, more opportunity. Okay, yeah, this trade looks good actually. See how they've used this as a good support level. This was the first one here, then the second, third, fourth opportunity missed, and they're trading right off the trend stop. Yeah, this trade looks good. I would actually take this trade, and my stop loss would be here. 77.67 is as much as I'm willing to risk. So not too bad, I'd like to say. Risk is minimal. Outcome would be that it comes up to 78.32. So we're gonna have to give this one some time. But I won't risk more than this. This is as far as I'll go on this trade. I could do it here, 77.64, but at this point it's Friday. I don't see the need or the desire to do so. I don't like the fact that they've been closing below, but on the 1 hour, everything indicates that they're going to make that move to the upside. So at this point, I'll stick with it. Now if it bounces from here, then we're good. It's trading right off the trend stop. Let's take a look at the volume real quickly. Volume here is $10 million on the buy, 31 on the sell, difference of 21 negative. Now, being that said and done, with that amount of negative volume, this thing should have hit the floor by now and come back and retest at 77.57, which they haven't. Now the buyers are coming in and holding this level, which is what I was expecting it to do. So let's see if they come in and drive more bullish volume. If they do, then we should see the negative diminish, and then at that point we should see them actually make that make that move. So long as they hold this level, we're good. I don't expect them to make a tremendous move now. I expect them just to hold the level. I expect this trade to actually unfold within the next 2 hours. Not right now. Right now it's a little premature, but everything indicates on the higher time frame that they're going to rally and take this right back up. So at this point, I would tell you 77.66 as a stop loss, and then if it doesn't play, then we lose of small trade. But if it does play, then the outcome is that it comes all the way back up to 78.30, and that's a strong trade to the upside. So at this point, it's just a matter of being patient and waiting for it. Now, if it breaks above 77.84, which is not too far from our entry is 77.80. So if it breaks above 77.84, then at that point, the probability is strong for it to come up. And right now, we are seeing that volume is directional to the upside, even though here we had volume divergence. So as they were coming down, they were pretty much announcing that eventually they were going to go long. This is where they're announcing they're going to go long. So that's why I'm more bullish on this trade than I am bearish at this point. Plus, the 60 minutes sort of gave us an indication. So the fact that they've held this level, they've hit it once, twice, third. Normally they'll hit it 3 times, not a fourth. And in this case, they're trading higher. Once they broke here, once they broke this level, then they came down and now they're retesting this. They've retested this level. So at this point, everything is indicative that they're going to use the trend stop as a support level to make that move right back up. So that's pretty much it. Unless there are any questions, I will leave you with that. I don't think that we're going to see much more action right now this morning. So I would tell you to monitor this trade, and minimum 78.03 or 78.02 would be the first level that it goes to. So from my entry, that would be a 20 pip trade, and if it continues, it could become a 50 pip trade to 78.30, which I think they're going to make a move right back up to the 200 to 78.30. So that's pretty much it, gentlemen. I will leave you. Have a great weekend. We will see you Monday morning, and we'll talk to you then. Thank you for joining us here at Phoenix Trading Strategies. Have a great weekend. Bye-bye now.